All right, the event of the earnings season. Nvidia's numbers are out. You are actually looking at a live shot. Actually, right now, this is a live shot of Nvidia trading the stock. The stock is basically flat as a pancake after market trading. Options bets were that this stock would go up 10% or down 10%. People spent an awful lot of money hedging their bets, and all of a sudden, you just got a ho hum move. It's kind of what we've been talking about. And all this information and paying attention to Nvidia. We're going to talk about why the stock hasn't really moved and could it move tomorrow? Yeah, absolutely it could. But regardless, let's talk about artificial intelligence and what AI is doing and what Nvidia's numbers actually mean for you and your portfolio, because artificial intelligence is just going to it affects everything. And these stocks, these AI stocks, AI related, tech related, have really been what's been guiding the market and your 401k and your other accounts. So here's a quick intro and we're going to get into it. All right. Hey, here I am. The numbers are out for Nvidia. Very ho-hum reaction. The stock is basically been trading within a range of up or down $2 a share. It's right now basically flat. So let's talk about this. What happened with Nvidia? Okay, let's just a little bit of background. If you didn't know, Nvidia is the okay, the most important stock in the whole world right now. And we've seen things like this before. We've seen the most important stock with other stocks for a long time. Apple, if you recall, was the most important stock in the world for a long time. Other stocks too, but remember when Apple is the most important, now it's Nvidia. These are the stocks that basically determine the tempo, the rhythm, direction, everything about investing and about the stock market that affects us. And there could be other stocks that do things also, but nobody's really paying attention to. I'll throw out a couple of names: ConAgra, Southwest Airlines, or Foot Locker, because they're they're really too small. The stocks, the size of the companies, it's too small to have any meaningful impact on the overall Nasdaq Composite or the S&P 500. By the way, you can't invest directly into an index, but you could invest into a fund that tracks or mimics an index. So what I mean by that is your money is invested in exchange traded funds or mutual funds, or you have individual stocks. Those are the three ways you're going to do this. If you're in ETFs, if you're in a small cap one, a large cap one, mid cap one, you are very exposed to technology. And I look at all of the ETFs, I use them. They're great tools to build investment portfolios. I don't pick an ETF necessarily because I think because I think it's going to go really fast. I pick an ETF because for the most part we invest for diversification, and then we just let the results come out as they will. So we basically follow a process and we surrender the results. And our expectation is that we're going to have good results over the next 10, 15, 20 years. That's how we do it. And if you have more time, then I think you'll have even better results. Having said that, technology as a sector, which is the biggest sector, not just in large cap stocks like like in the S&P 500 index or the Nasdaq Composite or the S&P 100 or even the Dow Jones. It's also the biggest sector in small cap and mid cap funds and international. And for the last 2 years, we've seen a huge move up in technology stocks, their prices, because of a new revolution of artificial intelligence, kind of what the internet did for stocks a long, long time ago. But if you recall, we all know how that ended in 2000 with a tech bubble popping and the NASDAQ going down 85%. Now, I'm not saying that I think the NASDAQ goes down 85% now. I think it's acknowledged that technology is just a massive part of how we live, of the economy, and every company today is one way or another an internet company, and every company will eventually become an AI company as well. But when you have stocks that are up a lot, that are up like, 7, 800, 900% in a couple of years, you have to think that maybe a pullback is in order, that maybe a company is as big as it's going to get. Now, remember when Apple hit $1 trillion market cap, the first one to ever do that? Now there's a couple of companies with over $1 trillion, and Apple and Nvidia and Microsoft, they're all about $3 trillion market caps. Tesla recently hit $1 trillion market cap. That backed off quite a bit in the recent weeks, but nevertheless, Nvidia came out with numbers, and the whole crux of the whole ball of wax for the artificial intelligence technology sector is riding on artificial intelligence. Tech stocks aren't moving now because memory chips, or because of new computers. That stuff doesn't move the needle anymore. That's just basically, revenues in, money out, very low margin stuff. The real cheesecake is artificial intelligence. And that's why for the last 2 years, 3 years, any company that has anything to do with AI, the stock gets an immediate pop in the market, and people talk about that as a new AI stock. Not every stock, not every company is going to be the winner. Not every company can, be important. Eventually, we're going to pick and choose among the winners. I think Nvidia is dominant, and it is widely regarded as the winning stock for AI, and their position is unassailable. That was like Intel as a semiconductor company in 99 and 2000, and the stock is still lower than it was 25 years ago. But we're talking about Nvidia here and now, and artificial intelligence could be huge. Okay, you want me to use the different terms? It will be huge. And everyone says that artificial intelligence is going to be huge. So experts agree that AI is going to be huge. I'm playing a little bit with Chat GPT. I've been on the app a couple of times, asking it queries and questions, and I actually asked it to make me a guitar lesson, and it was pretty cool how good it was. And it even served up YouTube videos, that are appropriate for what I was asking for. So it's pretty cool. And if you haven't tried Chat GPT to get at least a little glimpse of what this, if you haven't gotten a glimpse of what this AI talk is all about, is it a revolution? I almost said AI revolution. I don't know if you'd say I don't know if we should say revolution, but it's a big deal. So try the Chat GPT app on your phone, whether if it's an iPhone or a Droid or something, and play with it, and you'll get an idea of what it could do, why it's important, and maybe you'll look at it and say, "Nah, I don't really care. It's not changing the way I do anything." But the companies that you use, like Netflix, uh, Facebook, General Motors, companies whose products and services you use, they are going to be using AI to get products to you quicker, more targeted, and to try to deliver to you really precisely exactly what you want and need at the exact right time to get you to spend more money. Advertising. Um, After Facebook and Google, actually, Amazon, I think Amazon advertising is as big as those are combined, and they use artificial intelligence. So it's a huge deal. So Nvidia is the leader of it. You have to spend money on Nvidia chips to create artificial language models and to collect and collate massive amounts of data to give people the answers that they're looking for on the internet, on their artificial intelligence queries. So our Nvidia's numbers came out, 70, about 80%, 80 some odd percent growth in earnings. And normally you'd say, wow, 80% growth, that's incredible. But the company's been coming out with like 80% plus, 100% plus earnings, quarterly earnings results for a while now. So the stock is already bid up to reflect these great numbers. Their margins were down from last quarter, went from 73% to 71%. Still great, but we want to see steady or growing margins. We don't want to see a company go, for example, from 100% growth in earnings to 70% growth. Well, 70% is still growth. The trend is lower. And I think that's why Nvidia is not getting a massive pop in the market right now. Now, the CEO is going to be speaking in a conference call when this is over, after I finish this live stream, and we'll see if he has any color to add to the numbers. But the bottom line is, eventually investors need more. They need more shock value. They need more growthier and accelerating numbers, not just great numbers. And I think if that's the case, then I'm going to say Nvidia stock market success could become a victim of its own success. We'll see. And that's why I'm talking to you about it. Pretty much everyone in one way or another owns Nvidia through an index fund or a mutual fund. It's also, by the Nvidia's in the Dow Jones Industrial Average. It's in the S&P 500. It's in the NASDAQ. It's in the NASDAQ 100. So it's pretty much in every investment product there is. So is it over-owned? I mean, I looked at the Fidelity Contra Fund, and that is almost, it's 58% of the money in that whole fund is just in 10 stocks. So maybe these are over-owned. Maybe Nvidia needs a pause, but right now I think investors are really confused. Nobody wants to sell it. Nobody wants to buy it at this exact moment, and we'll see tomorrow. So a minute ago it was down 15 cents. Now it's up 21 cents after market trading. There are more important things to worry about. I think a lot of people, in particular Gen Xers and boomers, have been able to shore up retirement plans by owning a handful of really good hot stocks like Nvidia. But going for that Sunday punch with your investments to make up for a lack of financial preparedness for your retirement is a very dicey, dangerous game to play. And we need to focus on things like Roth IRA conversions, how you want to give money to charities. I've been learning a lot about donor advisor funds, qualified charitable distributions, updating beneficiary designations, having an emergency fund. The biggest wealth killer that I've seen is when people don't have an emergency fund, then whatever investments or wealth they have gets taken away because they didn't have an emergency fund. So these are the things that we need to focus on. And Nvidia, 10 years from today, we are not going to remember what the stock did today or does tomorrow. And that's the lesson here, that we stay diversified. Nvidia is a big company to watch, and it could move markets. It's very interesting, and I think a lot of you are fascinated by it and want to watch it. I too am fascinated by it. It's fun to watch. But I can tell you that the amount of times that I look at Nvidia stock throughout the day is very, very little. And the amount of work that I'm doing on behalf of clients is very, very great. And that's what we're going to continue to do. That's about it. By the way, diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. Have a nice day, y'all. See you tomorrow.